Hi, we want to welcome you this afternoon to our final webinar in a series about the new FASB Nonprofit Accounting Guidelines. This one is called What's Next? Implementation Strategies and Tips for Success. I'm Ruth McCambridge, and I'm the Editor-in-Chief of the Nonprofit Quarterly. And we're excited to share this important and very timely workshop with you. As you know, this is coming up on us very quickly, and we need to begin to get ramped up as individual organizations to report in a slightly different way. I'm really pleased to be joined today by Fiscal Management Associates, otherwise known as FMA, founder and CEO, Hilda Polanco, and their lead consultant, Gina McDonald. Gina and Hilda are very frequent presenters with us because they're so brilliant, and because you can basically go to the bank with what they tell you to do. As you know, if you've been following NPQ, the Financial Accounting Standards Board has changed their reporting requirements for the first time in many years. We've been talking about these new requirements for several months, including the new disclosures that may be required of your nonprofit. Today, in our final discussion of this critical topic, we think it's final, who knows, we will discuss practical steps for implementing changes and show you some examples that will help your organization adapt. If you have questions about the nature of these changes, financial statements, or how and why these changes were made, please see our previous presentations available on the Nonprofit Quarterly website. These will be listed later in this workshop. Today's free webinar is brought to you by AccuFund. Nonprofits have relied on AccuFund accounting software since 2001. It's focused on the nonprofit sector, delivering powerful fund accounting solutions, including automated dashboards and FASB Ready reporting to nonprofits who understand that transparency and accountability come with sound financials. Before we get started, I do want to say that during this webinar, you can ask any questions that you have by going to the question area in the bottom right-hand side of your screen. Don't ask me if we will send you the slides and the recording, because we will. We will send you the whole 9 yards of it, and then you can share it with your friends and make sure that everybody else you know understands the new requirements as well. We will make them also freely available on our website in the next couple of weeks. So make sure that if you're in conversation with somebody else who may have a use for them, that you just tell them, go to our website and type in FASB implementation strategies, and they'll come up with this webinar. Okay, so you can follow our discussion on social media and also contribute to the discussion on social media using our special hashtag for today, hashtag FASB Ready. Now on to Gina and Hilda. Welcome, you guys. Let me just one more thing before we get started. Hilda and Gina are two of our most popular presenters, and you are joined today by at least 500 additional, 500 of your colleagues from across the country and watching this webinar. But we'll see many thousands more in the coming weeks as people check in later, having heard from you that this was a great workshop. So thank you, Hilda and Gina, and let's get started.
Okay, we will close our webcam now, and we will come back in a little bit later, but here we are. Thank you, Erin, for helping with the slides. Welcome back. As Ruth, this is our fourth time together, and if I can just give you a little bit of history here, the ASU was issued in August of 2016, and it is hoping to bring up to date the field in terms of new expectations around accounting standards. Erin, if we could go on to the next slide. These standards were created again in August 2016. It was the first major revision since 1993, and it has an effective date of calendar year 2018, meaning the very calendar year that we're in, or fiscal year 2019. And so as we have been thinking about the next steps for many of you, we wanted to make sure that our time together with you gave you the background. Again, their effective date for calendar 2018, as well as fiscal year 2019. So for some of you, this could very well be the year that you have as a dress rehearsal to try this out. Later on in the presentation, we'll share with you some organizations that have become early adopters and have shared their information to help others in the field be able to comply and to have some idea of what these examples could look like. As we move on to the next slide, the ASU was really intended to focus on how others read the financials. The nonprofit sector, as you know, is quite complex. There are acronyms, there's restrictions and releases, things that in the for-profit world we don't really have to focus on. And so in trying to get key stakeholders of nonprofits to understand what is happening within the organization, the ASU was aimed at a few key stakeholders. The first is the board of directors. And so as we think about implementation, and together today we'll walk you through a pretty dynamite implementation tool that Gina has developed, and we're really excited to place in your hands. The idea is, how can we engage our stakeholders with the information that is about telling our financial story? So even though your board of directors understands your financial story, we want them to understand it in the way that it will now be presented externally. In addition to the board of directors, you have donors, and donors and funders are very specific about their intended outcomes with the revenue that you receive. So in the financial statements, as we walk you through some of the implementation ideas, keep in mind that this is meant for the donors and funders to have a better understanding of what is really available. You'll see there is a trend in the expectations that really is around clarity of financial health, and it's around clarity of what funds are available for what purpose. The last stakeholder that we see as being critical to the conversation are financial institutions. And these financial institutions may be those that you have loans with, or in a world where investments are becoming much more creative. Perhaps there are partnerships with CDFIs. There are investments from funders that are more of a longer term investment and grants. And so who are these financial institutions that are actually reviewing the health of the grantee? So as you think about your implementation strategy, think about how each of these key stakeholders really will play a role in your disseminating the new information. As we move on to a few other ideas on what does the ASU impact and what doesn't it impact, accounting standards are not changing. The concepts of restrictions and the concepts of releases, the concepts of donors' intent, all of that remains. So the accounting standards that came in effect back with FASB 16 and 17, 10, 15 years ago, they're still in effect. We haven't abandoned these ideas. What is changing is the financial presentation. We will see some old terminology, some new is going to change, and that's why the idea of a dress rehearsal is really appealing, because you want to think about what is the best presentation to tell your story. And as you'll see, there are options. There are maybe alternatives in how to present that information. And with disclosures, that's also an area that's changing. This is about increasing the transparency so that donors and board members and financial institutions can really have a sense as to the financial health of the organization and as you'll hear a lot more about, the liquidity. I think in other webinars you've heard us talk about LUNA, and it's our favorite acronym nationally, Liquid Unrestricted Net Assets. And LUNA is really the metric that we believe boards and leaders really need to focus on. How can we keep an eye on our reserves and how liquid they are? From those ideas, we'd like to think that the FASB changes are in line with those. It's really understanding what is available to meet obligations and to successfully make it through operations. And so for the next part of the webinar, I'm going to turn this over to Gina, who has been working with organizations already on early implementation and getting them to think about what are the provisions and what are the ways to take this home and implement. You are the first to see this implementation tool that Gina's been working on, and we hope that many of you will put it into effect and that we'll hear about your experiences. So Gina, I'm going to pass the baton to you, and then I'll be back in a little bit.
Great, great. So when we move to the next slide, just want to sort of, again, kind of preface what we are going to be talking about. Hilda mentioned there are several provisions to this new FASB, and while, as Ruth mentioned, we've had some previous webinars going into detail, trying to understand what the key provisions are, today we're going to do this a little bit differently and look at this new FASB Ready tool. As we explore the tool, we will sort of recap very briefly some of the major provisions and see how we might understand the provision and use the tool to implement the provision in our organization. Actually, we're going to see not only this new FASB Ready tool, but also we're going to point you to two other sort of bonus resources that you all can use as well. So we'll see those in a moment. So if we move to the next slide, as a recap, in the first webinar, we covered liquidity and availability. We see this provision, if we just click one time, we see this provision as being the most significant. All right, and so we're going to understand that this liquidity and availability being the most significant change in the new FASB provision affects our financial statement disclosures. Okay, and we'll keep that in mind as we look at the tool and see how we might be able to calculate our liquidity, okay, for our future disclosure. One more click, we'll see that in our second webinar, we covered topics like net asset classification, having to report on functional expenses now as a requirement for all nonprofits. These two concepts involve additional disclosures, they involve new terminology, different way of reporting. So that concept, those concepts are going to be highlighted in our tool as well. And then in our third webinar, we covered some additional provisions, things like underwater endowments, concepts around investment return. And so we're going to see that there's a little bit of everything in these FASB changes. Okay, so we've got some new disclosures, some new terminology, some new way of presenting financials, and some different concepts like the underwater endowments, a little bit of a different concept. And so if we go to the next slide, again, we see a little bit of everything. Because this FASB has several provisions that affect several items in our financial statements, we've designed the tool to think through each one of those items affected. So we're going to see that we've got 5 sections. This tool is Excel-based, and each section is a tab in the Excel workbook. We've got a summary that we're going to look at in a minute that goes through each provision in detail, helps us understand. It sort of organizes everything in one neat place for us. Again, lots of new terminology, right? Sort of as we kind of thought about in part 2 of our webinar. So we've got a section on terminology. and we'll see how that can be helpful where we can apply it. Liquidity, of course, I mentioned, is a major change here, a new disclosure. So part 3 in our tool is a template for calculation of liquidity. Okay, so this is a live template. We're going to look at that. We'll be able to use it internally in our organizations. And as Hilda mentioned, sort of if it's not applicable to our reporting now, we can use it as a dress rehearsal. And examples and resources are also incorporated in our tool because we know the best way to do something new is also to sort of see how others are interpreting and applying this new information to their organization, right? So we always like examples. We always like resources, make sure we're doing it right. We move to the next slide. We'll start reviewing component by component the tool. So this is a snapshot of what the first tab looks like. It's section 1 of our tool, and it is the summary and implementation guide. So we don't have the whole summary displayed here, just sort of the first 3 topics. But we'll notice that we list the topic, the requirements in plain English, which is what I like very much, right? So sort of what does this mean for us in our nonprofits? And then so we know that the FASB ASU affects our external reporting. So then our last 2 columns here in the summary are organized to tell us what we need to do. What do we need to do in our external reporting? What are the financial statement effects, right? What's going to be different in my basic financials? And then what about the disclosures? Okay. So sort of real life application of these requirements we've been learning about. We know we've talked a bit about the first item listed here, which is the net asset categories. Okay. And so if we move to the next slide, we learned that the net asset categories, the classifications, are changing. And this is the one requirement where I guess it's sort of getting a lot of press, we'll say. Okay? Lots of folks talking about the fact that 3 net asset classifications, remember, in our external reporting, are being condensed into 2. So while we saw the definitionally, what are the new requirements in our summary a moment ago, we learned that our financial statements are going to have to use some new terminology, right? We can't say unrestricted net assets anymore in our financial statements, okay? We have to comply, right, with new glossary terms, as FASB calls them. But if we move to the next tab, the terminology section in the tool is what's going to be helpful to us as we start to craft our own financials. Okay? So we understand that we have to use new terms. For me, when I'm learning something new, I always like to know, well, what was it called? So it's helpful to know, for instance, what is the former terminology, what is the new terminology, and is there a new definition? Because some of these definitions have a slightly different meaning today in the new FASB. So here in the second section of our tool is you're going to find some of these updates to the glossary, okay, and learn new tools. New terminology. Now, interesting, we are describing here the new net asset categories, but if you notice, FASB has also defined differently and come up with some new terms around endowment funds. So as Hilda mentioned, this concept of financial flexibility, right? This is all about our external reporting to all the stakeholders we just mentioned, and sort of letting them know what dollars are available for use in operations. And of course, we know when we have things like endowments, there may be restrictions on those dollars. Some of these restrictions are internally imposed and some are from external parties. And so here it's really interesting. FASB has specifically called out some new terminology around endowment funds. If we move to the next slide, this really takes us into this whole concept of the new liquidity disclosure. So see how it's sort of all tied in, where we're changing terminology, we're disclosing new information. It's all around letting folks know how we manage liquid resources. So we know we're going to have both a qualitative and a quantitative brand new disclosure. Here's our liquidity disclosure that actually calculates, if we click one more time, the availability of financial assets to meet general expenditures within 1 year of the balance sheet date. So we've got to actually tell external readers of our financials what we've got available as of the balance sheet date to pay bills 1 year in the future. So an actual calculation, and then a disclosure in words, right, describing how we manage cash flow. Interesting though, now if we sort of tie all of this together, some of us may have reserves. Some of us have, rainy day funds, things of that nature. Dollars restricted by donors that we can't use in operations, right? Or we may need to ask for permission or get a vote to use those assets. So let's flip one more slide and look at the third part of our tool, which the third part takes us through a liquidity calculation. So this is just one section of the calculation. It's longer than this. In our first step in our calculation, we're going to calculate, as of the balance sheet date, our total financial assets. Now, of course, this is going to be different for each organization. And the tool sort of guides you through some decision points and understanding what are the financial assets for our nonprofit. Okay? And we're able to calculate financial assets as of the balance sheet date. As a second step in the calculation, we then start to reduce this total financial asset for assets that are not available to be spent for general operations in the next 12 months. And so that's where we end up with this liquid available number, right? And it's a dollar amount as of the balance sheet date. There's been lots of questions around this concept of, gosh, what if my liquidity is negative? Could that happen? And yes, it could happen. FASB has said, once you go through this calculation, which of course the tool will help you with the calculation, it is going to require explanation in words, right? So now tell me, reader of the financial, what does this mean, right? If it's negative or if it's a small number. What about if it's a big number, right? Maybe we have lots of liquidity, right? Or it would appear as though we've got lots of extra cash. There's a story to be told in either situation. So if we flip to the next tab, we don't want to forget about the qualitative disclosure. It's an opportunity always, every time we're able to use words to describe numbers to tell our story. So we want to be able to describe the liquidity and the results of that calculation. The tool also gives some examples of the disclosure. And we know that we've got to start internally, ensuring that leadership, board members, everyone understands what went into that liquidity calculation and how we're going to describe that to the external world. So if we click 2 more times, we'll sort of understand that there may be a point in time after we calculate our liquidity, after we think through this qualitative disclosure, describing in words what the liquidity is trying to tell us, that perhaps it's time to either revisit some of our policies, right? These could be policies around board designated reserves, things of that nature. Okay. If we click one more time, we're going to see here is one of the bonus resources I had mentioned earlier that we also have on the FMA FASB Ready page, a free reserve fund policy toolkit of sorts. So it is a template to sort of help you think through if it comes a point in time now that we've got to talk about liquidity, disclose in greater detail policies around endowments and reserves, because this is what's now being required by FASB. We can start with this FASB Ready toolkit. If we need further resources around reserves, we can look to this template and guide as well. Okay, so we can use them together to get the information we need. If we go to the next slide, we know that another provision of the new FASB is to require all nonprofits to present expenses by function, by both nature, right? So natural classifications, which we see on the left-hand side, salaries, rent, those are our natural classifications. Some of us today report by function as well. So some of us also report by program or supporting services. If we don't, we're going to have to do that. If we click one time, we also know that commonly supporting services, which are management in general and fundraising, can sometimes be labeled overhead. And so FASB is telling us that everyone needs to report by these functional categories. And by the way, it is reporting in numbers as is presented here, also disclosing the methodology for allocation. So if we've not done this before, we sort of need to take a step back and actually come up with what the allocation methodology is going to be. Even if we've been reporting this way for a while, it may be time to refresh or refine our allocations. So of course, our tool has an example of the functional an example of the statement of functional expenses, as you see here. Our tool also has an example disclosure of the allocation methodology. But if we go to the next slide, if we need to take a step back, if we're not even at the point where we have that information, that we can disclose, we can use something like this program-based budget builder, which is our second sort of bonus resource I had mentioned. This is available for free on strongnonprofits.org. This tool will help you think through allocations to those different functional categories. So this is where we say, well, now I have to externally report this way, and even if I had to in the past, I'd have to offer more disclosures about my allocation methodology. We also have to tell readers of our financials if our methodology is consistently applied. So it may be a good time to look at a tool like this and refine those allocations, right? Folks are going to be trying to make a correlation between what we spend in programs and programmatic outcomes. FASB is telling us that this is the value of this kind of reporting. All right, so we know folks are looking at it and trying to make judgments about the efficiency perhaps, or the quality of our outcomes and what it takes us to achieve those outcomes. If we move to the next slide, again, to recap, FASB has some new guidelines around reporting of investment returns. We briefly mentioned new reporting regarding underwater endowments. So of course, if these are meaningful to you, you're going to be, wondering what the new requirements are and how do we comply. And something new around expiration of capital restrictions. That one is all about when we receive donor restricted dollars that we use to purchase long-lived assets. So things like capital campaigns and fundraising fundraising that then serves to purchase buildings and vehicles, things of that nature. There's some new rules around that in terms of our net asset classification and our disclosure. So our tool also incorporates these provisions, so we're not just including what we thought to be the most significant. The tool walks through each of these as well in both the summary and then also has examples to help us to comply with the new requirements and understand what the financials are going to look like after I apply the new standards. Okay. So at this point in time, we've reviewed the first three components of our tool. We went through the summary and implementation tab, the terminology tab, which is super helpful. It sort of tells us what the old words were, what the new words are, and then also the liquidity tab. I'd like to turn it back over to Hilda to sort of help us think through what I think lots of folks are thinking about as to, can I see someone else who's implemented this already? So Hilda, if you sort of take us through the last two components of the tool, that would be great.
Thank you, Gina. Thanks for that walkthrough. And so on the next slide, we go to the section of the tool that is around examples. And again, this is just a preview. This is the way that we've laid out the examples section of the tool is through working with organizations in early adoption, through examples provided by the AICPA documents, through the FASB itself. We have compiled examples of specific disclosures that follow the information that Gina just walked us through. In this particular example, this is around the restrictions and the donations with restrictions, without restrictions. You may remember that in the current guidelines, temporarily restricted net assets include two different types, which are program restrictions and time restrictions. So you see there's some similar terminology, but the idea that unappropriated endowment earnings also appears in temporarily restricted. We see that the wording here is more specific to endowment funds. So again, their effort to streamline the description. So in net assets with restrictions, this is a combination of both external and internal. The internal restriction is on the endowments. The board has chosen not to appropriate those dollars with the spending rate. And there are also restrictions for program and for time. And so the layout is one example and one that we think is pretty clear and direct. In the case of board designated funds, we often see organizations that have a board designated fund. Sometimes it's mentioned in a footnote, sometimes it's on the face of the financial, sometimes it's not mentioned at all. One of the goals of this particular example is that if you have board designated funds, there's a goal of disclosure of what it's for, and if you connect this to the liquidity, it's really to describe how available is that reserve, how easy would it be for management to tap that reserve if they needed it. So board designation is a pretty important aspect. This isn't to say that everyone should go and create board designated funds, but if they exist, or if it is a strategy for prioritizing resources, the tool that Gina mentioned, as well as these examples, will be very helpful. This is section 4 of the tool, and for each provision, there are examples. We won't go through all the examples today. We wanted to get you excited about knowing that these examples exist, and that as soon as you download the tool, they're all there for you to look at and to refer back to in your implementation. I encourage you to use these examples with your board, with other members of your leadership team, to make those choices around which disclosure you feel best represents where you are. In terms of our next slide, these are also examples, but these are examples of early adopters, and there may be others out there. We've been trying to keep an ear open for those organizations that have opted to early adopt. Anyone can opt. You'll see that these organizations have adopted for early adoption and have made their financial statements public so that others can learn. The University of Chicago is as you might imagine, a pretty large institution. We found that their disclosure on reclassification of prior year restrictions and the way that the capital grants had been accounted for was exceptionally clear. And although I encourage you to look at all three examples, if you're thinking about this issue of going back and not restating, but showing reclassified information, that would be a great example. The United Way Worldwide example does a really great job on page 7 of those financials in the statement of activities of showing how an organization might have an operating loss and then tap into the board designated reserves as a way to cover that operating loss. So it's this issue of operations versus non-operating sources. They did a really just crystal clear job of showing that, and I think you'll find that helpful. With the Dallas Theological Seminary, they also did a great job on the liquidity disclosures. So with that example, if you turn to page 29, when you go to the document, you will see a very nicely laid out example of liquidity. So between our examples in the tool, which again we compiled from looking at guidelines that the FASB put out, and then these early adopters, you've got some templates to follow, but remember this is your story, and the disclosures are guidelines, they're not mandatory formats, so you can make these your own in what makes sense to you. There's 4 or 5 provisions, as Gina mentioned. I encourage you to think about which are the ones that most critically affect us and what's the strategy for telling our story in these critical areas. If you should find yourself in the negative liquidity, which may be something that is concerning to a reader, I encourage you to, in addition to have the disclosure laid out and use our calculating tool to help you, that you have what would be the equivalent of a management plan, that when you hand these financials to a third party, with it is some type of cover memo or some type of conversation about what you're doing to improve the liquidity situation if it needs improving, and how that connects to your plans for the future. Remember, these disclosures are about the past, but when you hand these audited financials to an outside stakeholder especially, it's sort of how does that connect to the future. So you want to take that one step further and think about how that affects your plans for the future in terms of operating strategy. Lastly, in terms of resources, on the next slide, we want to remind you of 2 places. The resources that we're working on an ongoing basis. There is a site that you have a click here for FMA's FASB Ready, and as we go to the national conference in June and we hear directly from the FASB on new change, not so much changes, but more implementation guidelines, we will be sure to update this site. So visit it now and visit it again in the early part of the fall so that you can see additional updates. In addition, if you want to hear it straight from the source, FASB has a site where where you can download the actual ASU and also check on any other projects that they may be working on along the lines of implementation. Lastly, couldn't remind you enough the effective date. So on the next slide, we remind you that December 31 year ends, that would be calendar 2018, is the first date to think about. And then secondly, if you're a fiscal year, for example, June 30th, you are about to start in the next coming few months, July 1st, your fiscal years. We've got December 31st year end and then the fiscal year end. If you're looking at fiscal June 30th and you're starting to think about what year end looks like, you might start to think about what if I were to just reformat these to see what it would look like. Lastly, so what do we do in preparing for change? We want to go on to the next slide and just remind ourselves we want to educate members of the board and leadership on what these new requirements are, seek professional advice, talk to your auditors, think about what the presentation format should be that's best for you. And again, as I've said earlier, the last point of advice is dress rehearsal if you can. On the next slide, we're summarizing for you the 3 webinars that we have done previously. Today was a bit of a review and more of a focus on the tool. If you haven't had a chance to attend each of these, I encourage you to make it a marathon, get a cup of coffee, and go through the 3 webinars if you can in one sitting, and then the implementation will just flow nicely as you prepare to get ready. So as always, we've saved some time for Q&A, and I know that you've been probably sending in your questions in the chat box as Ruth suggested at the beginning. And so we're going to come back to our webcam, and we're here to answer the questions that may have come up. So here we are, and back to you, Ruth.
Thanks. Well, there were a lot of questions. Some of them kind of timed out. As you went through the material, you answered them already. So for those whose questions don't get answered and you're still confused on a point, feel free to write them in again. Okay, the first question is how much people are interested in what relationship your financials will have to the 990 reports. Is there any carry through, and particularly on reporting of liquidity?
So there's, Gina, do you want to answer that? Or do you want me to jump in? Gina, we can't hear you.
We can't hear you.
How's that?
All right, much better.
Okay. And so in terms of 990, that's a great question. It's interesting because functional expense reporting was always on the 990. That's how expenses are reported in that page, if you will, or that section of the 990 by program, management in general, and fundraising. And certainly the thing to remember is we don't want to have 2 different representations. So whatever allocation methodology and however we allocate those methods and report expenses in the audit, that should be the carbon copy that then goes forward to the 990. So it's not a different basis. So if we're tweaking one and we're going to report differently on the audit, that will carry forward for sure. Otherwise, we've not heard of any other changes to the 990 in terms of incorporating a section that involves the liquidity disclosure or anything of that nature. So really, in terms of what's in the new FASB, it's thinking through the fact that, well, when functionals change for the audit, that's going to carry to the 990, and hopefully the IRS updates for new terminology, right, around using our new with and without donor restriction terms and things of that nature. Those are considerations.
And if I could just add one point to what Gina said with statement of functional expenses, just from our other work nationally, the idea of indirect cost and grants and how does this all connect to our funding strategy, I encourage you to really review your statement of functional expenses and understand what it says about you in the context of what you otherwise are requesting as indirect costs and administrative costs in your grants. These are the same financials. It should be a consistent story. So I just wanted to say that. Back to you, Ruth.
I'm going into a comment rather than a question now, which is that one participant feels like this webinar should have come with tranquilizers. Any response to that?
Well, we thought the tool would actually relax folks, not create the need for the tranquilizers. I think as you go through the tool, you'll see it's just step by step.
Okay. Following up on that, are there any rough spots as you've experienced with this and understanding that you've made yourself extremely familiar with it and have been able to kind of pass that along to your clients? Are there any spots that get rough for organizations trying to adjust their reporting this way?
So I'm going to share one, and then Gina may have others. I think one of the points that Gina made was that the liquidity is around ability to meet cash needs for general expenditures. Well, what's general expenditures? There's very little guidance exactly as to how that is defined. So we've seen some rough spots about, well, what do I count in general expenditures? If I'm a sub-granting organization, are those considered general expenditures? So this idea of what is operating and expected to be covered at the end of the balance sheet, that's been a rough spot just in the preliminary conversations. Gina, do you see others?
Yeah, I mean, definitely it's around this concept of the new liquidity disclosure. So when we think about it, what FASB is telling us is, okay, as of your balance sheet date, end of the year, do a calculation. Tell me as of the last day of the year what you have available for paying expenses for the whole next 12 months. So lots of folks are saying, well, depending on seasonality of cash flow, I may or may not have very much, because that's not how it works, right? Especially if I'm reimbursement-based contracts, things of that nature. So there's a question of, well, what is the expectation? Is there an expectation that I have X dollars for next year? And so again, it's not a defined expectation. It's perform the calculation and then be prepared to describe in words how you pay the bills. Because we all manage to do it, and it's empowering to have the opportunity to describe the liquidity and not just be reliant on a number that's calculated. So for sure, that's how I think we should think about it, but that's been the challenge as to, well, is FASB telling us there's an expectation or what should the number be? And that's not been communicated.
Okay. So a lot of questions about endowments. One in particular that I think is interesting, which is how do you reflect program restricted endowments in the new reporting requirements? Are there any changes in that?
So the requirements are all around who is doing the restricting. So the focus is at the first level of understanding, is it an internal restriction or an external restriction? So that's the first test, because we could have program restricted that the board has set aside, and we could have program restriction that an external party, a donor or funder, has set aside. So it will depend on who is doing the restricting. So again, that's that idea of financial flexibility, or what does my organization have on hand that we could decide on, where the dollars get spent. If it's an external party who's restricting, we have less control, right? We've got to adhere to donor designations. So that's the first assessment, is who's doing the restricting. That's what's going to lead the classification and reporting.
Right.
And if there are specific restrictions of the endowment to specific programs, that could be in the disclosure as well. So the endowment portion could then have a footnote that describes what the programmatic restrictions are.
So people are very curious, I think, about the degree of a qualitative rather than quantitative reporting. And the examples that you showed us were fairly simple. They were 2 or 3 line discussions of that we have such and such a reserve that's controlled in such and such a way by our board. Have you seen any more kind of lengthy descriptions of what it is that the organization is really facing at that point to make sense out of the financials? Or do people tend to keep that stuff short?
I'm going to say, and I want Gina to add to this, that historically, there's always been a very healthy relationship when it comes to footnotes between the client and the auditor. And the auditor has always come to this as a sort of conservative, you can't really talk about positive things that haven't happened, but if negative things have happened, they need to be disclosed. That's this conservative approach. I think in this new world where there's more emphasis on disclosure, organization, you need to keep it simple because you don't want your message confused, but you should, as an organization, bring to your auditor what you believe is the best reflection of where you are. And then if they feel that there's assurances that you are making that are beyond what they would feel comfortable in a footnote, that's where the negotiation comes in. But you should, as a client, come forth with what you believe is the best reflection in the clearest possible way, even if it takes 3 sentences instead of 1. Gina,
Right.
Go ahead, Gina. Were you going to say something?
Yeah, I was going to say, for sure, at least one of those 3 early adopters, they're all big organizations, but if folks click on those links and look at those, it's kind of interesting because even the big organizations have a little bit of a lengthy liquidity calculation followed by maybe a 3-sentence qualitative disclosure. So I agree with Hilda. It's sort of, what is the factual information I need to get out there? We may be able to accomplish it in a short, succinct way. If we've got more to describe, certainly it could be more lengthy, but I would check out those early adopters because it's interesting. I wouldn't get hung up on them, they're huge organizations with big numbers. Once we forget about how big the numbers are, the disclosures are easy for us to understand, and we'll be able to see how they've done it, and I bet we'll be able to use those as a guide for us too.
And keep in mind, Ruth, also that what I mentioned in terms of the management response, so separate from the audit, if there is more that management wants to share about its plans for the future, that can be a cover memo to the audit.
Mm-hmm.
Disclosures are about the past, cover memo would be about the future.
Perfect. Okay, now comes the human part of this, which is as a person who's, reporting on nonprofits all the time and always going to GuideStar to look at any story that the organizations might be telling about what may otherwise look like very alarming financials. Can you talk a little bit about what the intention is here when you talk about storytelling? What are you really trying to do with the person who is reading the financials? What are you trying to explain to them?
Gina, would you like to take that?
Sure. So I do believe that whenever we are able to use words, we have an opportunity. And so I also know that, I could give a set of financials to 5 or 10 different people, and they may interpret it 5 or 10 different ways. So in terms of, and even Ruth, as you were saying, gosh, I might see deficits. I might see, I don't know what in the financials. If I just have the numbers, I'm left to guess. So really, when we say opportunity, and Hilda's mentioning, we need to be factual in the audited financials. Certainly, we can't predict the future. We wish we could, but we can talk about our story includes potential concrete plans. It includes strategies for liquidity. We manage somehow, and likely we have plans that we've enacted many years in a row. So sort of the story might include something like, we have a line of credit available because we have seasonality of cash flow. So typically our year end is December. That's a low cash month, right? So in terms of telling the story, we're taking numbers as of a snapshot in time, last day of the year. Who knows what it looks like? We want to explain them and sort of give context. It's really about giving context. So I feel that sort of those are some examples of what the story might be. And that's also factual.
Yeah, great.
I would say.
Okay, so a final question is, what are the hazards of failing to adopt these new changes?
Well,
that's not your final question. It's your next to last question.
So they're sort of mandatory, right? So it's a matter of how ready will you be. And there are times when we work with organizations and we have a question, for example, on the statement of functional expenses, and the answer is something along the lines of, I'm not sure, I better call my accountant. And so it will happen one way or another. The audit will come to be, and there will be questions. And so the preparation, I think, is the strategy piece. Otherwise, it will be a very thorny audit process when it becomes mandatory. And so think of it that way. It will be in order to have a clean audit opinion.
Now, can I ask you guys to go back over some of the resources that you've presented for people here, just so that we're sure that everybody has them? There's been a lot of questions asking where do we get the tool? Where can we access the tool?
Perfect. So, perfect to the next slide. So in the next slide, there is a link. So if we can have the next slide on the screen, this is where the tool resides, as well as the reserve fund policy that we talked about. Gina also referred to the program-based budget builder. This tool was developed some time ago, but it has become one of the most popular tools as organizations think about framing their budget on a program-by-program basis, which we believe should feed into your statement of functional expenses, which feeds into the 990. So this tool will help you build your budget framework in a way that informs the financial reporting and develops consistency. And that is a long link, but it will work once you click on it. And then lastly, as we mentioned, there is a FASB website that if you'd like to stay connected with anything the FASB updates, you can go there. In the tool itself, these links are there for you as well. The direct tools links, we also wanted you to know that these are elsewhere with regard to the FASB website itself in terms of where you can go. And then lastly, on the resources section, we always like to close these webinars with the reference to strong nonprofits. In there, you can actually have tools that help you along many of the topics we've talked about. But as far as specifically these implementation guidelines, the tool is there for you. And for those who were concerned about the tranquilizer, I hope that they feel a bit better after this conversation.
They'll probably feel better after they actually put their hands to the task.
Absolutely. And I do encourage everyone to reach out to your auditor and have earlier conversations rather than waiting till the day of the audit.
Right. Thank you so much, Gina and Hilda, and to all of you that attended today. I do want to say that Nonprofit Quarterly exists in part because of your support of us. So if you are not currently subscribers, you should be. And it's a good way of supporting us so that we can bring you this kind of really timely, thorough information. Nonprofit Quarterly really prides itself on being there with the goods when you need them. So I do hope that all of you will subscribe. If you don't subscribe, I hope you will donate and make sure that we live to provide another webinar, because that's what we want to do. Thank you so much, Hilda, and thank you, Gina. And we will look forward to the next installment.
Okay.
Bye.